So what is good, people? Welcome to another investing video. In this video, we're going to be talking about the top AI ETFs to invest in. There's a lot of channels right now talking about AI stocks. They are all the rage and they're all doing very well right now. However, I wanted to do something a little bit different and talk about AI ETFs. And that is because ETFs are a little bit safer than investing in individual stocks. Although they don't have the upside potential, they also don't have the downside potential that that individual stocks have. Full disclosure, this is not my list. I actually pulled this from the Motley Fool. You can see top artificial intelligence AI ETFs in 2023. I will put a link to this article so that you guys can take a look at it yourselves. But what I wanted to do is I wanted to go in and just look at each ETF, look at their performance over the past year, and look at their top holdings, specifically the top 2 or 3 holdings, just to see my thoughts on whether or not the ETF is going to do well because of it. So starting things off, we have the Global X Robotics and Artificial Intelligence ETF. By the way, these ETFs have really long names. I don't know why ETFs have such long names, but they all have really long names. So this one is only $28, which is not bad for an ETF. You can see over the week, it's just kind of been up by less than 1%. So it hasn't really changed much over the past week. If we look at the month, it's gone up 11%, 3 months up 19%, and over the past year up 25%. So this ETF has been doing well. Description: BOTZ provides market cap selected and weighted exposure to companies involved in the development and production of robots or artificial intelligence. The listed name for BOTZ is Global X, and yeah, I'm not reading that. So you can see that this is a actual weighted ETF, which means everything is not split evenly. It's going to have certain companies are going to have more weight in the ETF than others. We can see that it has 49 holdings. It is mostly in the technology and industry sector, and they do have a little bit in healthcare and financial services, which is something that you won't see a lot of in these ETFs. But their top holding, NVIDIA, has 11% of this ETF, which is really high, and then Intuitive Surgical has 9%. So this is really high for an ETF. Although NVIDIA has been doing very well, NVIDIA is basically taking over the AI scene. If we take a look at NVIDIA real quick, we can see just how crazy their stock has been doing. If we go over the month, 34%, 3 months, 65%, 1 year, 120%. So NVIDIA is doing crazy numbers right now in terms of their returns for investors. And I project that they're going to continue to do well for a while, just because, I mean, they just had the big announcement of all the things that they're doing for AI and artificial intelligence, creating their supercomputers and things like that. So NVIDIA is going to continue to do well. Intuitive Surgical is it's a company for like medical equipment, medical robotics and stuff like that. And it also has been doing very well, as you can see, up 51% over the year. Although I do think these companies are going to do well, it is still really high, such a high percentage for an ETF. But obviously, if these two companies are going to do well, then that means the actual price of the ETF is going to do well. So I guess it just depends on your feeling for their top holdings, whether or not you'd want to invest in this. They do have a lot of, looks like, Japanese robotics companies, which is going to be very popular with these ETFs. Japan is currently the leader in robotics. They're doing some crazy stuff over there with robots. And so it does make sense to invest into these assets. So that is pretty much it for this one. I don't think they'll have like a technical analysis on these ETFs here in Robinhood. So we will go ahead and jump into the next stock. All right, so the next one, ROBO, Global Robotics and Automation ETF. This one is at $56.99, basically $57. And just like our previous one, it hasn't really done much over the week. But if we check the month, it's up 6%. up 7% over 3 months, up 17% over the year. So it has done well over the past year. ROBO tracks a global index of companies involved in robotics and automation. The portfolio utilizes, that's a tough word for me all of a sudden, the portfolio utilizes a tiered weighting strategy. So this one has 91 holdings, 91 different stocks, mostly in technology, industries, and healthcare, pretty much the same as the last one we looked at. But they do have things weighted a little bit differently. As you can see, this one has more of the intuitive surgical than it does NVIDIA, but it still has a lot of the two, not nearly as much as the previous ETF that we looked at. They also have ServiceNow, which is a good one. ServiceNow does like cloud computing. They actually have been doing well over the past year also. We can see 17% over the month. If we jump over to the year, 10%. And 3 months, 24%. So yeah, ServiceNow has been doing well. As I mentioned before, they do cloud computing, and they are moving more into the automation, AI sort of thing. Cognex also does a lot of automation stuff. They are actually working with more so vision stuff, like lasers and stuff like that. And they've been doing well also, if I remember correctly. Yep, 11%, 14%, and 22%. And so all of these robotics companies are just doing crazy good right now. And so it makes sense that these ETFs are going to be performing very well. So you can see that this one is split more evenly. If we look at the top holdings, the top 10 is only 18% of their total. And so this one may be a little bit more safer, but less upside potential as the previous ETF that we took a look at. There's no analytics and stuff here on Robinhood for these ETF as well. So we won't check that out like we normally would for other stocks. So we will go ahead and jump into the next one. All right, so here is the next ETF. We got the iShares Robotics and Artificial Intelligence Multi-Sector ETF. So this one is at $31.97. As usual, these ETFs have not moved much over the past week. But if we look at the month, it's up 8%. 3 months, 8%. And over the year, 12%. So it has been doing well. IRBO tracks an equal-weighted index of global equities involved in robotics and artificial intelligence. And this one has 153 companies. That is a lot. That's probably the most we're going to see out of these ETFs. And we see mostly technology, communication services, a little bit of healthcare. I don't think we've seen healthcare or financial services in the previous ones. So it makes sense with this one having so many different companies, 153. But you can see that it is split pretty evenly, very much evenly between each company. The top 10 holdings only have 14% of the ETF. You can see they have Microvision, NVIDIA, Meta, all companies that are very well established, Spotify as well, and they do have AMD down here, HubSpot. I do like that they have both NVIDIA and AMD, so that way they kind of have their bases covered. Meta is, of course, everyone knows Meta, the company formerly known as Facebook. They are indeed competing with Apple right now, really more so with Apple on this whole augmented reality thing. I don't know how well things are going to go in that sector, but when it comes to AI and stuff like that, Meta is actually developing some new stuff, which is good. So this one is good if you're looking for a more balanced look at the different companies. Of course, once again, with this having everything split so much down the middle, it doesn't have as much upside potential as the first ETF we looked at, but it will be a safer one. They don't have to worry about, if NVIDIA tanks, then it's not going to take down the whole ETF, which is what you have to deal with that first one. So risk reward kind of thing. But this one does look good as well. I mean, 153 companies is a lot. I'm sure there's going to be a lot of Japanese companies in here as well, a lot of chip makers and stuff like that, but it looks like another good ETF. And our last ETF is the First Trust Exchange Traded Fund, VI First Trust NASDAQ Artificial Intelligence and Robotics ETF. That is by far the longest name we've seen so far. So this one is $45. Hasn't done anything over the week. If we check the month, up 9%, up 10% over 3 months, and up 11% over the past year. ROBT tracks a modified equal-weighted index of all cap global companies involved in artificial intelligence or robotics. This one has 113 holdings. So this one also splits things up evenly, and it has basically all companies to do with robotics and artificial intelligence. You can see here they have mostly technology and industry. They have some consumer defense and some real estate, which I don't think we saw any real estate in the other ones. Maybe we did and I missed it. Now this has a little bit more healthcare than the previous one we saw before. And you can see the top 10 holdings hold 22% of the ETF. And you can see just how evenly they are split up among each other. So the companies that they have in here now, C3AI has been doing crazy numbers. This was one of the ones that I wish I would have gotten into. You can see you have 17% over the week, 82% over the month, 62% over 3 months, and 94% over the year. It's been doing really, really well, especially this 82% over the month. If I would have known about this a month ago, I'd have done a video and went ahead and bought some shares in this. But unfortunately, I was not really looking at AI stocks back then. Mistake, of course. We got BlackBerry. We do have, this is a Japanese company, PKSHA Technology. I don't know if you're actually supposed to say that as a word or is it just an acronym. They also have ServiceNow, and they have a bunch of other companies that I'm not really familiar with. But you can see that it is split pretty evenly between them, and so it doesn't really matter all of that much what happens to each individual company because it's not going to drive the ETF down. C3AI, there has been a lot of analysts saying that there's going to be an eventual correction, which makes sense with a lot of these companies that have been doing so well. So keep an eye out for that if you are planning on getting into this individual stock. It might be good to wait for a little bit of a pullback first before jumping in. Of course, that's just what people are saying, so I'm not the expert here. I just go by what the analysts say. But this one is another good one. It looks like another good, evenly balanced ETF. So I guess that is pretty much it for the four. I actually think between the four, I have a little bit of a higher risk tolerance, and so I would probably go with that first one, which was, let me go back up in the article. That was the Global X Robotics. Let me pull that up again. Ticker symbol BOTZ. I think this one may be my favorite between them just because of its it's a little bit more risky than the others because so much of it is put into these two companies. But I think these two companies are going to do well, and so this is the one that I would invest in between them, especially since it's only $28, and so there's a lot of upside potential there. But of course, you know, if something crazy happens, like if there's some scandal in NVIDIA, the whole thing collapses, then the stock will take a huge hit. But the chances of that are possible, but not likely. So I think this one is going to do well. This is my favorite out of the 4 ETFs that we looked at. So that's pretty much it for this video. What do you guys think? Are you getting into AI stocks? You getting into AI ETFs? I think this is a great opportunity right now to jump into these stocks. AI is just exploding. It's all over the place. And these companies that are getting ahead of it and getting in front of all of this, I think they're going to do very well. So as always, thank you so much for watching this video, and I will catch you guys in the next one.